Yes, I'll just start with my intro here. So again, as always, we're recording this, so we'll have to those of you that are joining us now, we will send a recording out to everybody. This will be a shameless plug for our YouTube channel. We do keep all of these up on our YouTube channel. So when you get this recording in there, if you like and subscribe on that channel, any of these updates, any of this information we put up, which we do pretty regularly, is going to go up there. Normally, this is going to be a pleasure for everybody because normally when we do these reviews every single quarter, these town hall type formats where we're doing a lot of Q&A, it is only me talking, and I've got somebody way smarter than me with us today. I was down in Florida for Raymond James's national conference about 2 or 3 weeks ago, popped into a seminar on Social Security given by MFS Investments. Some of you might be familiar with MFS. It's one of the oldest mutual fund companies in the United States, one of the oldest investment management companies in the United States. I believe, Karen, correct me if I'm wrong on this, you guys actually developed the first mutual fund back in the 1920s, correct?
Correct.
Okay. And anyway, so Karen gave a really fantastic presentation on Social Security. I know we've got a lot of you, I see some people, the names are kind of popping in right now that are currently on Social Security that obviously your benefits now you've got locked in, but you might have some questions about survivor benefits. Everybody's got questions about the Social Security Trust Fund and what that looks like. And I know that I see a few names here that are not in the Social Security name yet, but will be at some point very shortly. And so Karen's going to help us out and hopefully answer a lot of questions about that. So I'm going to be sort of here in the background. I might pop in with a few questions myself, Karen, if that's okay. But again, Karen, Senior Business Development Strategist for MFS. I was really very impressed by the depth of your knowledge on this program, and I'm really appreciate you coming here and speaking to my clients about what is definitely an important part of everybody's retirement plan. So with that, Karen, I will turn it over to you right now.
Thank you, Brent, and thank you for the very nice introduction. And thank you to everyone else for taking your time to come and join today's presentation. We have a pretty robust agenda. You'll see that we'll talk about how benefits are calculated. We'll explore options for anyone who's ever been married. And we'll briefly talk about my favorite part, which is taxes. But before we get into it, let's address the elephant in the room, which is, will Social Security actually be there for me for the rest of my life? And my answer is, it depends. As long as you are age 55 or older when they actually get around to reforming Social Security. And remember, reforming Social Security literally is an act of Congress. And also, it is in the Senate laws that they cannot push it through a Budget Reconciliation Act. They actually have to sit down and discuss it. So if you're 55 and older, when they finally get around to reforming Social Security, I think you will be okay. And I say this for a few reasons. First, if you look at all the proposals before Congress to reform Social Security, they are all protecting benefits, or at least the majority of them are protecting benefits for anyone who is 55 or older. Another reason why is because, in my cynical opinion, the largest voting population are people who are 55 and older. And if your benefits were to be permanently cut, I'm pretty sure you'll let your local representative know exactly how you feel about it. And when they're talking about cutting benefits, they're not usually talking about cutting benefits to future generations. They're focused on changing benefits for people who are not yet on Social Security. So that's just my opinion. If you have strong feelings about, contact your local your local representative. So with that, let's get into the presentation. One of the most, yes.
One thing real quick, and I will not interrupt you on this, I promise. But one thing I think it's important for people to recognize is we have been here before. In the 1980s, there's been a few times where the program has, at some point in the future, looked like it was going to be insolvent. And that doesn't necessarily mean that the program is going to be insolvent. It does mean that the benefits could be cut. It's a pay-as-you-go system. So right now, you essentially have enough tax receipts that are coming in to pay those Social Security benefits. That will not always be the case. And so it would be potentially some kind of prorated payment if they come up with no solution. Is that a fair assessment, Karen?
Yes. So when they're talking about when they're talking about Social Security going bankrupt, running out of money, being insolvent, all that they're saying is that all those reserves they've built up over the year, that's gone, and now they can only pay out as much as they receive. And currently that's somewhere between 75 to 80%. That would be the worst case scenario, but I would politically be surprised if that would happen. All right, so let's get into the presentation. So an important concept to understand is this full retirement age. You'll see it's somewhere between 66 and 67, depending on your year of birth. And if you're turning 62 this year or in the future, you'll see that your full retirement age is 67. And the reason why it's so important to understand this concept is because you'll see that a lot of calculations are based on when you turn that full retirement age. And if you try and do something before full retirement age, the simple answer is no. And that's because there's a lot of reductions and withholdings and penalties if you do anything before your full retirement age. So for example, your Social Security retirement benefit, that's what you get for paying in for 40 quarters, and then they average it out over your 35 highest years of work. As long as you keep on working, you'll always pay into Social Security, and they're always cherry picking your 35 highest years of work. Now, if you take Social Security before that full retirement age, you can see that your benefits are permanently reduced. After your full retirement age, they automatically increase by 8% per year. That 8%, that's an after-tax growth, and that's on top of any inflation. So Brent knows this. Last year, that inflation protection, it was a record high one. It was at 8.7%. Will that always happen? No. But if you had that flexibility of letting Social Security grow, and let's say you're 67, not only did you get that 8% growth, but you also got that 8.7% inflation adjustment for almost a 16.5% increase in your monthly Social Security benefits if you have that flexibility of letting Social Security grow. So the point is, if you are concerned about the risk of inflation in retirement, and if you have that flexibility of letting Social Security grow, then those higher inflation adjusted benefits may be one of your best defenses against the risks of inflation in retirement. And keep in mind that this growth, it's technically a monthly increase. So another way of thinking about it is every 3 months, you get a 2% increase in your Social Security benefits. Now, another thing to talk about is working and receiving Social Security. So let's start off with some of the good news. Good news number one, the moment you turn full retirement age, you can work, you can earn as much as you want and receive Social Security. It's only if you're under your full retirement age that there's limits on how much you can earn if you also want to receive Social Security. So this year, it's around $21,000. Next piece of good news, Social Security only looks at your wages. So they only look at income that has that payroll tax deduction withheld from it. So you can have as much money coming in from your IRAs, your 401ks, your pensions, whatever. They only look at your wages. The next piece of good news, that second bullet, they only care about your wages after you start Social Security. So you can earn as much as you want up until you start Social Security. It's only after you start it that there's wage restrictions. So let's say you retire in June and you're 65 and you've earned $50,000 up until that point. That's fine. Social Security will record it. And then going forward, that's when that earnings limit takes effect. And the final piece of good news is that if you're married, Social Security only cares about your individual wages. They only care about the wages of the spouse who's collecting Social Security. So let's say one spouse is 62 and retired, but the other spouse is 65 and working. That's fine. The 62-year-old spouse who is retired can go ahead and collect Social Security because the earnings of their spouse will not affect them. But the most important thing is probably that subtitle, which is that this test, it's going to affect any benefit you want to receive, whether it's your own benefit or benefit off a spouse. So what that means, when it comes to deciding when to claim Social Security, first thing we want to know is, are you working? And if you're working and under full retirement age, keep it simple. don't take Social Security because of that earnings test. So your follow-up question is, well, what do I do when I retire or turn full retirement age? Do I take Social Security? Do I let it grow? In that case, sit down with Brent and figure out how much you can withdraw from all of your portfolios. So your 401ks and what you have with Brent and everything else. If you can live off your assets, maybe let Social Security grow. If you can't live off your assets, maybe take Social Security sooner. It's more important, in my opinion, that we look at maximizing all sources of income and not just focus on that Social Security number. Brent, anything you want to add?
I think that when we run through these tests, in almost every case that we look at, I'm usually suggesting to people that they wait for, always, like you said, the answer, if you're working, bringing in income, the answer is do not take it early. But I think it's only what 2 to 5% of the people in this country actually take it at age 70. But you're getting obviously almost 130% of your benefit, plus now you're compounding that out at the cost of living increase. And break even there is what, 83, 84 years old. So if you're going to live beyond that, it really mathematically in almost every sense ends up being a far better long-term solution for you. Would you agree with that?
It's a great segue to the next point, which is it's not just about you. If you're married, your decision, especially if you're the highest earner, is going to have a tremendous impact on whichever spouse lives the longest. And there's a 50% chance that one of you is going to live until 90. So that means there's a good chance one of you is going to live past whatever that break-even age is in your very nice, fancy Excel spreadsheets. So let's talk about the options for married couples. So we'll use my parents as an example. Dad has a higher benefit, mom has a lower benefit. Even if mom never worked and paid into Social Security, she could receive a spousal benefit, which is 50% at the most off of dad's benefit. Technically, it's dad's benefit, his full retirement age. You'll see that the survivor benefit is up to 100% of dad's benefit. If mom takes before that full retirement age, you can see it's gonna be reduced. Now, since mom worked, mom receives an amount that equals a higher of her own benefit or that benefit off dad. Mom doesn't get both. Mom receives an amount that equals a higher of the two. Now, the option for mom to start with a spousal and switch over to her own benefit, that's gone. That was only available to people born before January 1st, 1954. So when you apply, Social Security just gives you the highest available benefit. And the only way mom can receive a spousal benefit is if dad's receiving his own benefits. So the question is, well, what if I'm the lower earner? And what if I apply before my spouse applies? What do I receive now? What do I receive when my spouse applies? So let's look at a case study. We'll start off with Chris. This is how it's typically described, which is Chris has been the family coordinator their whole marriage. So the only way that Chris can receive a benefit is when the spouse applies. And since Chris will be that full retirement age, Chris is going to receive that maximum spousal benefit. In this case, it was $1,200. Now, Blake is probably what happens more often in real life, which is Blake's 62, Blake decides to retire. So instead of receiving $1,000, which would have been Blake's benefit full retirement age, Blake's going to receive a reduced amount of $700. When Blake's spouse applies, Social Security compares that max spousal, in this case it's $1,200, against that retirement benefit full retirement age of $1,000. And that difference of $200 gets added on to Blake's current benefit for a grand total of $900. So what you're seeing is, I know in a lot of presentations, we talk about you receiving an amount that equals the high of your own benefit or the spousal benefit. What actually happens, and this is how Social Security sees it, is that you always start off with your own benefits. And when your spouse applies, they'll top it off with that difference. And then under Alex, if your own benefit is, so under Alex applies at 62, also receives that reduced amount. When Alex's spouse applies, Social Security does that same comparison. Alex's spouse earned less than Blake's, and that's why that spousal benefit is lower. And you'll see, since it's not the higher amount, the amount does not change when Alex's spouse applies. So if you're married, take a look at these 3 different scenarios and figure out if your situation is closer to an Alex, a Blake, or a Chris. For Chris, the moral is the only way you can receive that maximum spousal amount that you're hoping for is if you're full retirement age or older when you first apply for anything. Under Blake, the moral is if your own benefit is reduced, it means it's also going to reduce that maximum spousal amount as well. And under Alex, if your own benefit at full retirement age is higher than that spousal benefit full retirement age, you will never, ever receive a spousal benefit. Brent, anything you wanted me to add or clarify before I go on to survivor benefits?
Yeah, and I would say that if this looks a little wonky to everybody, it is, because you're dealing in some cases, particularly if you're taking it early, a reduced benefit on your own Social Security, but they're calculating the spousal benefit essentially at what the full retirement benefit would have been. Am I right on that, Karen? So
Correct.
you're getting two different calculations here in terms of what brings that what would apply to your own personal situation. And I would just add that we can absolutely run multiple scenarios on this if you have questions about what this might mean for you personally.
And the point I really wanted to bring across was if you're not getting what you thought you would be getting, Social Security is probably correct with the spousal benefit, because the only way you can get that max spousal is if you are full retirement age when you first apply. I know a lot of emphasis is often on the spousal benefit because that's what you're going to receive the soonest. In my opinion, though, what matters the most and what has the biggest impact is what happens after the first spouse passes away. So after the first spouse passes away, the surviving spouse keeps an amount that equals a higher of their own benefit or what the deceased was receiving at death. This assumes that the surviving spouse was 67 or 66 at full retirement age when they claim that survivor benefit. That's why we have age when you claim a survivor's benefit here. It means that even though my mom claimed her own benefit before full retirement age, that's fine. Mom's currently 70, dad's still alive. Mom's going to step up to what dad was receiving at death. If mom wasn't full retirement age, you can see that the amount that percent would be reduced. So even though you claim your own benefit before full retirement age, even though that reduces that spousal benefit, it's not going to have an impact on you after your spouse passes away. So if you can see, the bottom line is the age of the lower earner when life events happen. Lower earner claims her own benefit 65. Even though they're receiving a reduced benefit, they're going to step up to what the deceased was receiving at death. So what this really means is that if you are the spouse with a higher benefit, your decision impacts your spouse for the rest of their life. For the average worker, the difference between claiming Social Security at 62 and 70 is about $12,000 a year to your spouse after you pass away. If you've paid the max into Social Security, you're looking at $25,000 difference. So if you're married and if you are the spouse with a higher benefit, I want you to think about your spouse for a second. You don't have to look at them, just think about them. Could an extra $12,000, $20,000, $25,000 make a difference to your spouse after you pass away? I think it could. And this is where I use the tough love, because I have 4 brothers. I'm the only girl. I figured out pretty early on in life that if I give tough love, men listen to me a lot better than if I'm nice to you. So here's the tough love. A lot of times it's the husbands who come up to me and say, Karen, you know your stuff, but you got to understand, I worked really hard. I paid a lot into Social Security, and I want to get as much from Social Security as I can during my lifetime because my parents passed away when they were 72, and I want all this money to go golfing and boating and tennis and whatever it is that you men do when you retire. And all I hear is me, me, me. Here's the thing. I don't care about you as an individual. I care about you as a couple. And I recognize that by taking Social Security at 67, 68, maybe even 70, yes, the chances have just increased that you could pass away before you received every dollar that you could from Social Security during your lifetime. But if you have that flexibility of letting Social Security grow, and if by doing so, you are giving your spouse the highest source of dependable, inflation-adjusted income for the rest of their life, and if that gives you peace of mind, you did everything you could to protect your spouse financially, maybe it's worth the wait. If you don't like your spouse, you should definitely take as soon as you possibly can. Brent, anything you want to add to that?
Now, like, let's just tell me what would happen here. Let's say that you got your high earner is going to wait till age 70 and dies at 68, 69 years old and has not elected a benefit yet. Now what happens to the surviving spouse?
That's a great question. So even though he passed away without claiming, his surviving spouse gets all the money. He steps up to what he would have received at death. So it's not like it went away. He's still giving his spouse the highest source of income he possibly could. So let's talk about divorce. There's two ways marriage ends, death or divorce. So as long as you're married for 10 consecutive years, you can receive a benefit off your ex. Your ex has to be age 62, dead, or receiving disability benefits. And you have to be 62 if they're alive, 60 if they've passed away. The percentages are the same. The only difference is that it turns out it's better to be divorced sometimes than it is to be married. If you're married, remember mom needs dad to apply so that mom can receive that spousal off dad. With divorce, that's not the case. As long as you can show that you were married for 10 consecutive years. So show up with a copy of your marriage certificate and your divorce decree. Social Security will take a look at your benefits against your ex's and give you the highest available amount. You don't have to tell your ex. You don't have to let them know. They will never know. Social Security will simply give you the highest available amounts. The option to start with the spousal off your ex and switch, that's essentially gone. That was only available to people born before January 1st, 1954. Do me a favor and write this down, $1,800. In 2023, the maximum spousal benefit, whether you're married or divorced, is around $1,800. Everyone's situation is different. This assumes that your ex paid the maximum into Social Security for 35 years. This year, that's around $160,000. So if that's the case, the maximum spousal is $1,800. Now, the reason I bring it up here is because Social Security will not release information off your ex until both of you are age 62. So now you have a placeholder. What this also means is if your own benefit is greater than $1,800, you won't receive anything off your ex while they're alive, but keep track of them because you never know what happens when they mysteriously pass away very soon. What about remarriage? If your ex remarries, wish them well. It's not going to dilute your benefits. You're not going to dilute their benefits. It's fine. The only way you could lose benefits off your ex-spouse or a deceased spouse is if you remarry. But there's a couple of exceptions to this. The first one is if you remarry after 60. So if you remarry after 60, remember that's when survivor benefits become available. So if you remarry after 60, you hold on to that survivor off your ex or deceased spouse. So what that means is if you remarry after 60, you will receive an amount that equals the high of your own benefits, the survivor off your ex or deceased spouse, or the spousal or survivor off your current spouse. Not all three benefits, but the higher of the three. The second exception is if your second marriage ends, you can become re-entitled to benefits off the first marriage. So some of you may remember Jane Fonda. And if you remember Jane Fonda, you may remember that she was married to Tom Hayden and Ted Turner. So those were two marriages that lasted 10 years. Both ended in divorce. So Jane gets the high of her own benefits. Since Tom has passed away, the survivor benefit off Tom, or the survivor or spousal off Ted Turner. Not all three, but the higher of the three. So the morals from that story: only stay married for 10 years at a time, always marry rich people, and always keep track of your exes because they're worth more to you dead than alive. So Brent, anything you want to say to follow up on that?
I would say just clarify again the difference, a deceased spouse, that just how that benefit can become open to you with a deceased ex-spouse, I guess you should say.
Sure. So if you remarry after 60, you hold on to that survivor benefit off your deceased spouse, whether that spouse is deceased after you got divorced, or maybe you were unfortunately in your 50s, your husband passed away, and now you're in your 60s and you get remarried. As long as you remarry after 60, you hold on to that survivor benefit off your deceased spouse. So what that could also mean is if you remarry after 60, you could start off with a survivor benefit off your ex-spouse or your deceased spouse. And then when your new spouse passes away, you can switch to that survivor benefit off them. Or it could be in the other way as well. Point being, if you hold on, if you marry after 60, you have a lot more options available to you. So now let's finish with my favorite topic, which is taxes. Once you start receiving Social Security, those benefits can get added onto your income and may become taxable if your income is greater than $25,000 if you're single, or $32,000 if you're married filing jointly. So they use an interesting formula called combined income to figure out how much of your Social Security benefits actually may get added onto your income and become taxable. So combined income, this is not your income if you're married filing jointly. It's your AGI, that's your adjusted gross income. So that's your pensions, your IRAs, your wages, basically everything. They also include municipal bond income, but only half of your Social Security benefits are included. So what that means is if you have that flexibility of letting Social Security grow, and now if Social Security represents a higher percent of your retirement income, you may actually be able to reduce your taxes over the long run because only half of your Social Security benefits are included versus all of your IRAs and your pre-tax 401k withdrawals. So what this means is if you are concerned about taxes going up in retirement, and if you have that flexibility of letting Social Security grow, those higher Social Security benefits may be a great defense against the risks of higher taxes in retirement. It's a complicated idea, and this is why you have Brent, because he can run through the numbers with you. Also, another concept to discuss with him is something called the widow tax trap, WIDOW. And the widow tax trap is the risk that the surviving spouse may end up in a higher tax bracket because now they're filing as a single person. So for example, the 12% tax bracket goes up to about $90,000 if you're married, but only $45,000 right now if you're single. So how does this fit in with Social Security? It's because when people retire, we just psychologically don't want to touch our IRAs, our 401ks, and our brokerage accounts. So what happens? First spouse turns 67, they retire, they turn on Social Security, and at 73, you're forced to take those RMDs, those required minimum distributions, those required withdrawals from your IRAs. Next spouse does the same thing. First spouse passes away, and now the surviving spouse has to take withdrawals from both accounts, which may be spinning off more income and pushing them into a higher tax bracket. So maybe, again, everyone's situation is different. And again, this is a complicated discussion, but this is why you have Brent, so that he can sit down and discuss this in person with you individually. So maybe instead it's worth letting Social Security grow and taking a little bit more from your portfolio at the start of retirement so we can look at controlling taxes over both lifetimes. Your CPA really, really good at minimizing taxes right now. part of the strength that Brent brings to the table is strategic planning and finding out how we can set up your portfolio right now to really hopefully reduce taxes throughout retirement. Something else to discuss with Brent are some items that can be excluded from this. So I like to focus on Roth. So if you have a qualified Roth withdrawal, which is you've had the account for at least 5 years and you are age 59 and a half or older when you make that withdrawal, it's going, no matter how much you withdraw, it's counted as 0 on your tax forms. So that leads to some interesting conversations. One conversation is, instead of focusing on what do I take now, my pre-tax or my Roth, it could be how much can I withdraw from both to really minimize my taxes throughout retirement. Another conversation with Brent could be, should I consider a Roth conversion, which is where you take that withdrawal from the IRA, pay taxes on it now so that it can continue to grow tax-free. Or if you're working, maybe shift some of that pre-tax contributions over to the Roth so that we have that flexibility of controlling taxes throughout retirement. Again, everyone's situation is different, and that's why you have Brent here to really discuss this with you and customize it for your situation. Brent, before I give my closing remarks, anything you want to add to those points?
Yeah, I would definitely add to that particularly if you're retiring before, you're at 70 for Social Security, 73 for obviously RMD land. The desire in many cases is to wait to take those IRA assets now. But if you do think about doing very systematic Roth conversions during that time through your 60s, what that can do in terms of reducing your tax benefit is absolutely massive. Because if you stop working, you've dropped yourself down into a lower bracket anyway, and why not bump yourself up to some of those higher tax brackets, which still, compared to where you came from, might be very low, and think about what that can do from a conversion standpoint, because you're basically foregoing, you're paying a little bit more tax now with the expectation of paying a lot less in the future, and we can run those numbers, and it can be very substantial if you're looking at conversions today over the next 5, 6, 7 years. Versus waiting until you've got to take that money out of the IRAs.
I could not agree more. So how do you decide when to take Social Security? 4 things I encourage you to sit down with Brent and discuss before you claim Social Security. Number 1, are you working? And if you're working and under that full retirement age, keep it simple. Don't take Social Security because of that earnings test. Next, sit down with Brent, figure out how much you can withdraw. If you can live off of that, take Social Security at 70 maybe. If it's not enough, let's take Social Security sooner. I want you to focus on, let's maximize all sources of income and not just look at that Social Security number. Third, life expectancy. In my opinion, I only care about your individual life expectancy if you're single. So if you're single and you think you'll live forever, take Social Security at 70. If you have health conditions, maybe take it sooner. Fourth, what about married couples? As you know, for married couples, there's a 50% chance one of you is going to live until 90. So in my opinion, your individual life expectancy doesn't matter. So if you're married, then the spouse with a lower benefit, you have flexibility to take it whenever you want. So if you're 62 and you're done working and you want to turn it on then, fine. If you want to continue to let it grow, that's fine. You have flexibility. But the spouse with a higher benefit, I want to encourage you as much as possible, let Social Security grow for as long as possible. Because by doing so, that's how we maximize your benefit. That's how we get the most for your spouse after you pass away. And that's how we really get the most from Social Security over both lifetimes. In the end, Social Security, it's as much of an emotional decision as it is a rational decision. So my role is just to provide as much information as I can to help as many people as I possibly can. But everyone's situation, it's gonna be different. So my encouragement to you is, don't listen to your friends, your neighbors, your colleagues, your cousins. What worked for them, it might not work for you. because you have your own unique goals and income and needs. So do me a favor. Before you claim Social Security, sit down with Brent and talk with him not only about how to get the most from it, but how this decision can impact your taxes, your withdrawal rates, your asset allocation, and everything else we discussed today. So Brent, I will turn it back to you.
Well, we already got a question, so I want to encourage anybody, if you have any questions, please ask everything. If you join me for my quarterly stuff, nothing is off limits. So question we just guys, please discuss depreciating dollar versus taking Social Security later. So here's my thoughts, and Karen, tell me if you don't agree with the sentiment here. The question is the federal government, $31 trillion in debt. Obviously, at some point, there's going to be a fiscal brick wall. We don't know exactly when that's going to be, but should I just get as much money as I can right now from Social Security? And my answer to that is you have a couple things. First, you may not like the dollars that you get in terms of your benefit, but you're going to get paid these benefits. And if you're waiting to take that higher rate, what you saw in the last couple of years or so, and we've been in this inflationary environment, I think what was it, 6% in 2021, 8.7% in 2022. So it's one of the few assets that you have where you do have a level of inflation protection there for sure. So I think if anything, if you're concerned about inflation, concerned about depreciating dollar, it's one of the assets that you do have, one of the income streams rather, where automatically there's going to be some level of inflation protection built in. Would you agree with that, Karen?
Definitely 100%.
Great question though. And I know that's obviously a hot topic. And I will say too, when you turn on the news, so many of these problems that we have, they seem like they're intractable and they can't be solved. It wouldn't take that much to bend the curve enough in Social Security to essentially solve the problems that they have. I mean, if you took myself, I'm about to turn 50, and you said, hey, guess what, Brent, it's not going to be 67, your full retirement age. We're going to move to 68, 69, 70, whatever, that alone saves the problem. People that are probably listening to this don't want to hear this, but if there's some level of means testing, not so much for people that are on it now, but for the younger generation moving up, that also would probably bend the curve enough to solve the problem. So the problem within the system, these are all solvable issues. And, the United States, I think it was Churchill or something that said back, you can count on Americans to do the wrong thing until they have to do the right thing. And I think that's pretty accurate. Generally speaking, Congress in many cases is going to do the wrong thing. They're going to kick the can down the road until they are forced to do the right thing. And Social Security, I think, is one of those issues where you'll find a rare moment of bipartisan unification, I guess, to get something done. Another question. Thank you for covering the emotional aspects of when it took take Social Security. That you've done so has eased my mind. And I think anything with money, and particularly Social Security, you're talking about survivor benefits. You're dealing with two things: is most kind of normal, rational people that are somewhat grounded. It's the relationships in their lives that are most important. Their money's pretty close. Money's up there. It's right up there with it. So in this case, you're dealing with something that's kind of touches both those issues. So I do think when you're thinking about that surviving spouse, it matters. So thank you for recognizing that. This is another question. What is the maximum Social Security benefit anyone can get? Is there a cap? There is, and I would be lying if I told you that I knew it off the top of my head, but I know that Karen does. So I'm going to throw that one there.
It is, I knew it was around 3,600. It's 3627. So Social Security only releases the maximum for people turning full retirement age this year. So what that means is if that person took at 70, it's closer to 4,300. If you're younger than full retirement age, you might see that your benefit is actually higher.
Okay. Great question, though. Any other questions? These are all really good questions. So unless we get a couple pop in here really soon, we'll probably wrap this up. And I will say that, MFS they're phenomenal partners to us, great resources. We have the capacity to really run very in-depth Social Security reports for our clients here. Also, our partners at MFS, they've got a team of people that can do it as well. Our people in retirement planning down in St. Petersburg can do it. So if anybody would like a deeper dive into their own personal situation, please let me know. I'm happy to talk about all this stuff as frequently as you'd want to. We did record this. Fabulous job. Thank you as well. That's another just comment that came in. We are going to record this. Please feel free to share this with anybody that you think might find it helpful. And in the meantime, there's a lot happening in the world. And if any of you have people that you care about that just want some clarity on Social Security or any other issues, send them our way. We're happy to talk about all this stuff and dive into their own personal situations as well. So I don't want to keep Karen too long. And if we are all done, last question, last chance. If something pops up, please email me separately. Happy to answer it. And Karen, thank you so much. I know it's probably about 5:40 in the evening there in New Hampshire. So you having a glass of wine tonight, or is this it?
Not tonight, but sometime.
All right. All right. Well, with that, Karen, thank you very much. I'll hop on for a couple minutes just in case anybody else has a question for the next 30 or 40 seconds. But Karen, I really appreciate it. Thank you very much. All right. So again, I'll keep up here just for a few seconds, give you a couple other quick updates. We're also going to be doing one of these in a couple months on Medicare, and these government programs specifically. They're obviously there's a lot of moving parts in these. We're very fortunate we have people like Karen. We also got some phenomenal Medicare resources as well that can help us give us some clarity on these programs. But if this has generated any questions that you have personally about your own personal situation, please reach out to me. If it's something you'd like to dive into with a little greater detail, we're happy to do that. But otherwise, if we have no other question, will you be sending out the slides? I can definitely get you the slides. Yeah. So if you want to email me separately, I'm happy to send the slides out. And actually, MFS, our partners over there, they've printed out a really fantastic small handbook as well that covers in a little bit more detail most of the information in those slides, which I've got a copy of it sitting on my desk right now. It's fantastic, and I'd be happy to send that out to anyone that would like a copy of that also, because there's some very good useful information in there. And with that, if there's no more questions, thank you all for taking time out of your Monday afternoon. We'll be doing our next quarterly review where we talk about the markets, the economy, that type of thing. That'll probably be early to mid-July. We're finalizing a date on that. But in the meantime, again, you spent some time with me this afternoon to discuss Social Security. It means a lot to me that you've taken time out of your day to do that. So any further questions, reach out to me personally. And with that, have a great afternoon and evening, everyone. Talk to you soon.